Hello again and welcome back. Today I am going over the market outlook that I have for this week, as well as some of the stock picks I have for trades that I may take. Okay, so aside from this week being a short trading week because of MLK Day, we have the inauguration coming up. We have a very top-heavy market. So I'm going to be pretty cautious about taking long trades this week. I think there are a lot of things that could cause the market to drop significantly this week. So that said, let's get into some of the charts and see what there is to see. All right, so what you see here is a weekly chart of the SPY going back all the way to 2009, the market crash then. Now you can see once that was complete, there's sort of a bull market that started, and we've been above that trend line all the way up until this event on I guess in October of 2018. At that point, we dropped below this major trend line, and we've been just running back tests ever since. I think another thing to point out is this sort of megaphone pattern that's been forming ever since January 2018. There was sort of a flash market crash, and then September, October 2018, another flash market crash. And then what happens in February to March of 2020? Another flash market crash. And so each time that we backtest this trend line, well, there's been a crash. So where are we right now? We're right on this trend line. And I think that any day there can be another flash market crash if this pattern continues to play out. This is sort of unprecedented behavior of the market that I think is largely caused by a US dollar that's under a lot of stress. It could be a lot of people are saying it's could be the final days of the dollar. The Federal Reserve and the US, I guess, government are doing everything they can to keep the market from falling. But there comes these points where they're unable to do so, and so they react after the crash happens and pump the market back up. So I think it's likely that we're going to see another crash. At the very least, even if we don't see another crash, we're due for a correction. Looking at the US dollar index, you can see, looking back, around the March crash, we had a little bit of a spike in that dollar index. And then since then, as we've continued to basically pump money into the system, the dollar has become weaker and weaker. Right now, though, it's near a low point. It's near support. And not only that, we have what looks like a bounce. So if we go back to the daily chart, we've got this trend line going back to July of sort of a weakening dollar, and then we've bottomed out here. So we undershot support by, well, actually, I'm not sure where I drew these support lines, so let's just get rid of them. Let's actually go back here and draw a few new ones to sort of get an idea of where support actually is. Okay, so yeah, you can see we bounced right at one of these levels. Yeah, I guess right at the most likely support level back in 2018. So at least we're seeing a short-term bounce, and I think we're likely to at least come back to this $92 level, which would mean a market correction rather than a crash. If we break through that level and keep going up, say maybe to the 99 to 100 level, that might mean the market is crashing. So right now, I don't think the market has accounted for this breakout in the US dollar. I think it's starting. Let's go back to the daily chart on the SPY. Yeah, you can see it's sort of starting. We reached a top of the trend and then we're pulling back. In the Qs, same thing. We've reached a top during a shorter term trend and we're pulling back. Now, there's a few people who saw more of a rising wedge pattern in the triple Qs, and I think that would be given by sort of this. I'll have to redraw the chart. I think this is what the wedge pattern or rising wedge pattern would look like for a shorter term rising wedge. And you can see we have had negative divergence on the RSI, basically higher highs with lower momentum on the RSI, or lower highs on the RSI. And so that's another signal that we're getting ready to roll over in the market and break out of trend. So whether we were in this wedge pattern and just did a retest and now are rolling over, or we're in this trend channel, we're definitely seeing some downside. Now, if this finds support here, then we'll see a little bit more upside in the market. If it breaks through, then we can see the Qs at least down to this level, if not all the way down to this level trend line, which is a longer term trend line for the triple Qs. Okay, looking at the Russell 2000 on the weekly chart, we've been, since I guess around mid 2018, we've really just been going sideways on this chart. And if we go back to the daily chart, since the March crash, we've sort of been in this rising wedge pattern. We didn't have negative divergence, but we did have a breakout of that pattern, which this could be a legitimate breakout or it could be a blow off top. I think the lack of corrections along the way, you can see this sort of has been going almost straight up in a narrow channel. There's only been one real correction, and that correction was recovered, and it was a break out of the trend and then a break back into the trend. So it looks to me like we might be seeing a blow off top. We don't have negative divergence on the daily chart that I can tell. On the hourly chart, we are starting to get some negative divergence. If we look here, yeah, it's actually all along this this breakout, we've had negative divergence on the hourly chart, but it's not clearly shown on the daily. Okay, I guess, yeah, it's not clearly shown on the daily. So we may have more strength to go on this. I think it mostly depends on whether the market crashes or corrects in the next week or two. All right, the volatility index for the S&P 500, the VIX. There's not really too much I have to say about this other than I noted, if you look back on the SPY, these dates correspond these dates of basically these flash crashes since 2018 correspond to these dates that are marked out on the VIX. And you can see each time we've had a flash crash, the VIX spikes way up, then it goes down a little bit. But it doesn't go down as much as it was before the flash crash. So the first one in January 2018, left us at a low of around 11.7. Then the next one left us a low of around just a little higher, 12.1. Then the next crash, well, we're at around 21. And another thing to point out is that if we go back to the SPY, based off the timing here, I think we have a little bit more time for the next flash crash. If this chart plays out, a little bit more time than these sort of red lines indicate. But the timing of these things, that's something I don't have really any knowledge of. So I don't know how to predict. It may be impossible to predict when something like this is most likely to happen. So it is important to note that we are settling down on the VIX. If we go back to the daily chart, we've sort of been in this, almost this megaphone type pattern since November, but we're sort of range bound, sort of on the lower half of this channel. All right, gold. We've been in a bull market in gold, really, really since okay. I guess this is the long-term outlook for gold. We have a bull market, we have a long consolidation and correction period, a bull market, long consolidation and correction period, and now we're in another bull market. We overshot our trend, and this sort of pattern may continue. If it is a sort of bull market, it tends to be more of a parabolic, or if it's like the end stages of a bull market, it tends to be more of a parabolic rise if it's a very overhyped or a very hyped bull market, which I think this will be one of those. I think we're going to see numbers in gold that not a lot of people expected. But what we're seeing, I guess since August of 2020, we've been in a correction period. And I think we're likely to test the bottom of this channel before we break out again. You can see we've had two false breakouts, sort of this double top in gold, and those and it's failed both times, although it has not yet broken into this sort of main trend channel yet. I think it may quickly break into it, be flushed down, and then we make another run. Whatever the case is, oftentimes gold tends to be inverse correlated with the dollar. There's a bunch of other correlations that are more accurate than with the dollar, but oftentimes if the dollar has a spike, then gold has a crash. So if this breakout in the dollar is real, that tells me one of two things. One is that gold may have anticipated this breakout and it made, the false breakout was the correction. The second possibility is that that gold hasn't accounted for that breakout in the dollar yet, and it may have us drop down to this 1730 to 1750 level. If the dollar does, or if the gold does break down to this 1730 to 1750 level, I am going to be buying gold mining stocks, silver mining stocks pretty aggressively. If we look in at the GDXJ, we're sort of in the middle of a breakdown back into the trend channel, and I think we're very likely to see this bottom of the channel retested. And if the GDXJ is leading gold, we'll probably see gold break back into that channel as well. Okay, so with the knowledge that I'm pretty bearish on the market right now, here are some of my favorite stock picks that I'll likely be trading if I see confirmation of the setups that are shown here. So the first one is Pinterest. This is one of the stocks that has shown a lot of exuberance in this market. Over 200% gain since pre-March lows, depending on what you look at it. Maybe you could say only 160 from some sort of this February peak, but it's made a run. It hasn't had a lot of corrections, and it's showing pretty significant negative divergence on the daily chart. So if it breaks this trend, that's a signal for entering a short trade. And I think the first point is going to be around the 52.41 level, and probably more likely to see this $46 level. And maybe we'll go a little bit lower. If it's a full market crash, we could go, much lower. But if this is just a correction, well, even going down to this $27 level, I think is realistic. Although it's not going to happen overnight, it's probably going to be, run to support, have a counter rally, run to the next level of support, and so on. Next one is Grow Generation Corp, GRWG. This is another stock that I think is overextended. Since March, we've had a run of almost 600%. So much of that run has been without correction and consolidation. What I think is likely is that we break below support, and then we make a run probably down to this level, this $21 level. That's a move of like 57% roughly. There is another support level between that we may tap and consolidate it, but I think at least correcting to this slightly more major support level is likely. We do have negative divergence on this chart, and yeah, so I think that's a good setup for a short. Okay, HGV. This stock has dropped significantly with the March crash, and it is close to recovering to pre-March lows or pre-March levels. But what I see is that I think this is an unsustainable rally. At least past this November level, we have negative divergence on the daily chart. We're sort of just climbing up this trend line. So if we break below that, I think we're likely to come fill the gap, or tap support, probably both. So let's pull this back. Just saying it's going to fill the gap. That's still a really good risk reward ratio trade. And I think it can happen pretty quickly because there's really just no support for it to fall down on, except for maybe this level around $25. But that's most likely going to be a quick reaction where it'll bounce off and then continue down a couple days later. Okay, UA. Now, this stock hasn't made the kinds of gains. It's actually below pre-March lows, and it's trying to recover. So, but it's sort of made a constant grind higher without any significant corrections. Once it broke past this 1050 level. So we've been getting negative divergence on the daily chart. It's been climbing up this channel, and then mid-December broke out of this channel. So it's sort of doing a back test. Now it has a gap to fill up here. So my short entry for this trade is if it does go and fill this gap, I think that's a really good entry to take a short position. And I think it's likely to move all the way down and retest this support level down here, because there's really no support along the way. That could change if this has a lot more consolidation before it tests this or before it fills the gap. In that case, it won't be a great trade anymore, but right now it looks like it's building up to be a very good trade. Okay, Yeti. This is just another stock that's made very significant gain since pre-March lows. We can see this one's up over 100% in just over a year, just under a year actually, and so it has negative divergence building up on the chart, rising wedge pattern, a nice level of support down here that I think gives it a good risk to reward trade. There are levels of support along the way, but this level isn't nearly as significant as the lower level, so that is why my price target is down here. Okay, NTLA. This is another stock that has made pretty good run. It broke out in November and it's run over 200%, so I think it's very overheated. 200% move in just a couple months. So this has had negative divergence since December 10th, and it continues to be intact. So I expect a break of this lower trend line at some point, and that break will be my entry to go short. And the sort of target level of support to cover at will be this sort of long standing support level, 33 or 32.50, somewhere along that area, somewhere around that area. So yeah, this stock looks like it may have a blow off top before it breaks down, so we'll have to keep an eye on it. All right, the next one I'm watching is Upwork. This stock, stock's had a pretty good run as well. Basically 180% from pre-March lows to the high. So it also had this nice gap here, which is what caught my attention, was a big gap, then decreasing momentum on increased price, or, new highs in price with decreased momentum. Once we break out of this channel, I think we're going to fill this gap. So that's what I'm watching for, a breakdown below this chart, or a breakdown below this trend line. If it's impulsive, that would be a good area to go short and ride it down to fill the gap. Okay, Sono is a very similar trade. We've got not nearly as much of a price increase, but there's this nice big gap to fill. So we've got decreased momentum, or I guess divergence, on the daily chart. And if we break below this level, below this trend line, then I think we're going to fill the gap back down at support. Okay, Uber is another one where I think that if we break down below support after this long-standing rally, then we're going to go down and fill this gap. You can see this also has negative divergence. And so yeah, you can see the same sort of setup happening over and over again on all these charts. ASML, this has had quite the rip since it broke out in August. Okay, only about 30%, but there hasn't really been any corrections, and at least not significant corrections, and it looks like it's having a blow off top. So you can see negative divergence was intact until what I'm calling this blow off top. So if it breaks down below this lower trend line, I think we're likely to see it move all the way down to this support level where it broke down at, or broke out at. It's not a huge percentage gain, but it's I think a very good risk to reward ratio. All right, ASPS, this stock has been building this sort of funnel pattern for the better part of a year, and it had a false breakout here. Now it's going to retest this level of support, and I think the way to play this is if it breaks out again, then we look for a price movement of, a little bit over 100%. So going from here, 100% price movement would bring us up to this level. I'm being a little conservative and would cover a little bit earlier. But basically, I think at this point, I had some trouble in the last couple weeks where the stock is sort of grinding around here and not really breaking to the upside or to the downside. I think the next time I enter this trade will be when it has impulsive volume with an actual breakout. So this trade may not play out, it may just fizzle out, but I think it's much more likely to one day either have an impulsive breakdown or an impulsive breakout. That's generally how these funnel patterns work. And it's got a lot of price movement, so I think it will be a really good risk to reward ratio if I can actually take this trade. Okay, so plug is just totally out of control. We've had a movement of over 1,400%. This may be, aside from Tesla, maybe the biggest bubble stock I have seen. We have had basically a breakout and then a run up in this trend channel. We started to get negative divergence, but then broke out of this trend channel with what I think is a blow off top. And the top here, I went short 2 shares. That didn't really follow any of my trade setups, but I, this had, as I said last week in my videos, this had incredibly high volume. I think the second highest volume ever for this stock. And sort of a doji candle on that day, meaning there were a lot of sellers that were stepping in. And the next couple of days we had a breakdown. So I think we're likely to see this stock break right through the channel. Maybe it will retest the channel and stay inside of the channel, or maybe it will break back into the channel and stay inside again, or maybe it will retest this level and bounce off. I think it's more likely that we head all the way down to a good support level, maybe around this $14.07 level. And even if it does that, we'd still be up, you know, over 200% or around 200% on this stock, which probably is more realistic. But it's not for me to say what a realistic level is for a stock I don't know anything about. As a trader, the goal is to find a setup. We know this stock is on a technical level pretty overheated, and so when you see a trade there, you can take that without getting too caught up in the fundamentals. All right, Peloton. This is another stock that is way overheated. We've moved only about 400%. Not too crazy compared to Plug, but we've had this negative divergence that's been playing out since October, and in this rising wedge, we may be about to break down out of this rising wedge. If we do get a breakdown, then I can see this stock going down to around $100 level, and that's going to be 35% gain. Another area to enter, probably one that I would feel more comfortable entering, is if it breaks below this $145 support level, just because you've got a gap that's been filled as well as another reaction point. This falling wedge doesn't have a lot of reaction points, so I'm not very confident that this is actually going to be respected for the stock. You know, we may come down here and jump back up again. But as of now, I think I would take a small short position here and then add to the short position if we break down below this level and play it that way. Okay, so Snap is another stock that's setting up for a big correction. We haven't had, I mean, it's been like about 100% run up. Well, if we go pre-March levels, almost 200% run up in this stock. So we've been having negative divergence for a while in what looks like this rising wedge pattern. We broke out twice, but broke out of this rising wedge twice, but with decreased momentum. So once we do break out of this lower channel here, I think we're very likely to come fill this gap. So this is a high risk reward trade. Okay, Spirit Airlines. This is from more of the recovery sector than the tech sector, but what I've seen here, Spirit Airlines on a fundamental level, I think is one of the weaker airlines. They've got a lot of debt, and so if people are going to bet on this going or on an airline going bankrupt, Spirit is one of the top couple airlines that they would be doing that with. But fundamentals aside, we had a huge rally up here back in November, and then we've been sort of grinding higher. Now we don't have negative divergence technically. Well, okay, we do, but I guess what I saw was this. December 3rd, we've got sort of a peak. December or January, let's just say 8th to 12th, we had basically we matched that peak, but with much lower momentum. So that's technically not negative divergence that has continued here. If we make a new slightly higher high, then it would be. However, it's showing weakness, and there is a gap to fill down here. So if this just does break down below this channel or below this trend line that it's been sitting on, then that's a high risk to reward trade that you could take, or that I will be taking most likely. I think I'm actually short on this trade because I entered this preemptively. I shouldn't have done that, but I'm in the trade. It's sort of still a low risk position unless this stock gaps up. It's just that there hasn't been confirmation, which means I'm more likely to lose the trade than to win the trade. Okay, Zillow Group is a stock that has gone up almost 200% since pre-March levels. Long build-up of a rising wedge pattern. Long build-up of negative divergence. And so this is another one where if it breaks, I think it's going to hit a good resistance level or a good support level. And so this one is one with a good risk to reward ratio if it does break the trend, if it does break that rising wedge. DocuSign, this is another one that's run up like crazy, 89 to 263, so almost 200%. We've been, I guess since July, grinding around in this range from here to up around here at this $250 level. We've been in this rising wedge since, I guess, November, and we broke out of this range, but it wasn't with an impulsive volume, and it looks like we're going to fail that, very likely. Maybe we do a retest and break out higher. If we don't, and if we break down into this range again, then I think we're likely to head to the bottom of the range. And so I'm going to take a short position if there's an impulsive break below this range. If it goes, if it breaks out and high, then it's just something I miss. I don't think I'm going to go long on this one if it does continue the breakout. Okay, golf. This is, this stock hasn't gone up tremendously much, but I do see a good risk to reward trade if this breaks down, which it looks like it's started to break down. I'm only going to take this trade if it does a retest of the trend line. But another one, rising wedge, negative divergence, and a solid level of support down here that you can short this stock to with a high risk to reward. That's my plan. Revolve RVLV. This stock is another one where it broke out, made a good run up, 65%. It's been starting to have negative divergence. I guess if you consider this as the start point in August of the negative divergence, or if you consider this the start point, either way you look at it, it's had negative divergence. And if we break down from this, probably from this lower trend line, then it's a good short to take because, well, it gives you a good risk to reward ratio with the major support being down here. A good level to cover at. There are some levels up here from 2019. I don't think those support levels are super relevant because we didn't really respect them very much on the way up. I guess we had small reactions along the way, so maybe we'll have small reactions on the way down at those levels, but I expect this to be probably the major bounce level. L-Pro, another stock that, well, this was an IPO back in June, but it's just gone straight up. No real kind of corrections, and we've had bearish divergence since its IPO date. So if this breaks down, I think we're going to see a nice correction and a good level of support. So this is just another good risk to reward trade that I can see playing out if we break below support or break below the trend line. Okay, COUP, C-O-U-P. This is a stock that's been in rising wedge pattern since the March lows. It's had a run up of over 100%, and it's showing that there's negative divergence. So if we break below this, we're probably going to head down to this $240 area. So it's a good risk to reward trade with a good percentage gain on the trade. Okay, WBT. This is another trade that I'm taking for basically an overextended stock. It's made a gain of over 80% or 90% in just 65 days. So a couple months, around 3 months. We're running into major resistance here. Well, yeah, I would say this is significant resistance, and it's gone straight up since the breakout. So I think this is a very likely reaction level where it's going to correct and at least go back down to this level, if not all the way back down to the breakout level. Anyways, thanks for watching. I'll see you guys next time.